startups, operational. And with such a large system, investors are not falling behind. India, being home to around 6,000 active investors who are keen to put their bucks in promising ideas and innovative entrepreneurs. Now, ladies and gentlemen, I would like to invite Mr. Abhishek Agarwal, Managing Partner, Rockstud Capital, to please join us on the stage. Here he is. Can you please welcome him with a huge round of applause? Along with him, I'd like to invite Mr. Shiva Shanker, Vice President, Ankur Capital, joining us on the stage for the next panel discussion. Let's hear it loud as we welcome them, everyone together. And to moderate the session, I'd like to invite Ms. Ritu Marya. Let's welcome her with the hugest applause, everyone. Well, with this next session, they're going to talk about the prerequisites for an early stage VC or an angel investor for investing in a business, and what do they really want to see and hear, especially during the ongoing pandemic. With this, I'd like to hand over the session to Ms. Marya. Over to you, ma'am.
Thank you, Bhavna, and warm welcome after the lunch. I was telling him lunches and conferences used to be so functional, and now they've become like a pleasure and a leisure time. So it's good to see that after a long time. So talking about capital raising, I've talked so much about it in the virtual environment in the last 1 year that it feels really good to be back and doing it in a physical format. And we've got two wonderful panelists here. We have Abhishek, who is investing in a lot of early stage startups at Rockstud. And, he's also been investing in models or startup models, particularly, which are very akin to SMEs and their business. So, we can get a good idea about understanding how they, at Rockstud particularly, how do they look at business models of startups, and how do they sort of take practices also of SMEs, which are good, robust business models. And we also have Shiva with us, who's joined us from Ankur Capital. Ankur Capital is a social impact fund where they look at such startups which are about creating a lot of social change. They are going to bring a lot of change, or so to say, change the world kind of business models. And they have been doing that for now quite a while. It's good to have you, Shiva, here in the physical format. And so let me start with you, Abhishek. So as an early stage investor, what kind of business models are you looking at Rockstud Capital, particularly when it comes to D2C, which is, so to say, the more the heated up space right now? And also today we are seeing Thrasio kind of models wherein a lot of SMEs are getting a chance to find their business models next to startups. So what is your views on that?
So first of all, Ritu, thank you so much for inviting me on this esteemed event. It's so great to see actually people here in front. So it's a great change. Coming back on your question, so from our perspective, unlike it might be assumed that typically VCs are only looking at tech-enabled businesses. We look at first of all the entrepreneurs, right? I mean, what kind of entrepreneurs are coming from what background and what they actually intend to do, right? What kind of change they want to bring in the system, or if there is something which is missing in terms of a piece which can be scalable. So that is something we look at. So scalability is extremely important. If it is tech enabled, great. Even if it is not, it is not a compulsion, since we have invested in both kinds. Uh, from the Thrasio point of view, of course, it's a great opportunity because now you see that something has been validated from the Western world. And that has been the case, right? We always get confidence जब कोई बाहर वाला हमको पैसा देता है. वरना otherwise, so we never get any confidence कि हम भी, whether we are good enough. So, of course, country like India, where you have 138 crore people and businesses, which are set up in lakhs and lakhs, certainly there is a huge potential there. There is no two ways about it. Whether that will be only captured by a certain set of startups, not necessarily, but yes, they might have certain advantage, which probably from a traditional thought process, which are already existing, maybe last 20 years something, they might not be able to reach there for certain reason. And if that course correction can happen, then this is definitely the way to go for. And we are already seeing a lot of things already happening in India, which actually again showcase that this is a thing which would continue to grow for the next 20 years. And not to forget that, considering that we are at a cusp of that $2,000 per capita GDP sort of number, after which typically the next $1,000, if it is added as a per capita GDP, then almost 60% of that money actually going to spend on this kind of discretion spend, because the first $2,000 is all about roti kapda and makan, right? Uske baad hi, you have that money to spend on certain brands. Your preference would arise in saying that, okay, now I'd like to have a Bisleri rather than a mineral water or the general water, right? So that is very important. And therefore, if you are having a brand, it will definitely, matter a lot in terms of, being relevant accordingly.
Sure. Thanks for setting the tone there, Abhishek. Let me come. Shiva, I understand, that Ankur Capital looks for social impact startups. Can you give us a sense of what sectors do you look into more closely, and particularly given today's scenario where healthcare is equally social impact and what we eat is equally a social impact. So, what are the areas that you're really focusing on which are important today from a larger impact perspective?
Absolutely, Ritu. The things we've seen since we started investing as well, a fairly narrow focus when we started back in 2014. But started deploying that first fund, we realized something fairly similar, that there's this blur what is good to be done and actually a great business opportunity as well. So what we invested in quite heavily from our first fund was technologies that were around agri-tech, healthcare, medical devices, and innovations around those areas, and SME enablement solutions as ways of saying there are solutions, and just the varying number of saying there's 60 to 70 million SMEs actually operating across the country. If you can make them more efficient, there is considerable value to be had and generated. So those for us were kind of the three big themes we realized from our first fund. And now, just as the investment landscape has changed, you're seeing agri-tech become fairly mainstream. All of the large investors in the country and globally actually deploying to that space as well. Similarly, on healthcare, health tech solutions is starting to attract a lot of people. So for us, we're starting to say, okay, these themes actually have been able to demonstrate core value. They obviously continue to be core aspects of what we're looking at, but we're also looking at other themes of saying edtech solutions, particularly around skilling, looking at solutions on fintech that may lead to saving generations are really attractive opportunities for us to look at as well. And staying with kind of more transformative tech solutions, which for us is a key element of what we discovered during our first fund as well. So looking at solutions that, for example, maybe on deep tech solutions around alternate proteins, batteries, etc., saying if these technologies, which will take a longer gestation time than your traditional venture capital investments, but when you get those value to get created, there is this considerable non-linear spike that just starts to look like an elevator shooting up at those moments. And those are also worthy investments to make because the impact they can have on the broader ecosystem is truly transformative. So for us, those are the areas we're looking at and saying from this fund, we're quite bullish. We've probably crossed, we're across 50% of this second fund that we're currently managing being deployed, and hoping to still get a few more startups in that before we look to expand out for other ventures.
Now, given the fact that digitization is a given, and every business needs to digitize in order to reach its customer segment and reach out to wherever they're sitting, and so on. Now, given this scenario, 2 or 3 years down the line, how would you really differentiate between a startup and an SME? Because everybody would be digitized, everybody would be selling online, everybody would have some tech to support their businesses. So, as an investor, where would you sort of draw the line and say that, look, this is the business I want to invest in? And honestly, much to the not so much liking of SMEs, it's always been startups who get the funds. But given the fact that everybody is going to be floating in the same space, what's going to be the difference? How are you going to draw the line?
Amazing, Ritu. I'm glad that you brought up this. And I'm telling you, it's going to be a very good problem, right? It is a problem which should see the light very soon. So from a VC point of view, it is not that they are looking, or forget about VC, for any kind of investor who is investing in some other businesses, somebody else businesses, is not from the fact that they are startups, right? It comes from largely from the kind of way you are managing a business. See, I'll tell you, Ritu, what the major problem used to be. Why an SME was ignored over a startup? Processes, compliance. Are your books are clean? Are you compliant? Are you giving taxes? Are you paying taxes? Do you have a focus to scale? Right? Do you want to take your brand from just one place or one city to become a, let's say a pan India, or let's say made for the world, right? These are the things which are very larger thing, right? बनियों के जैसे business चलाना है कि Amazon की तरह चलाना है, right? There's a huge difference. It is not about the kind and size. Size नहीं होता है. You probably would see that certain SMEs would be doing far more revenue and far, far more profitable than certain names which always grasp larger funding. And then people question, Arey, what is this? This is nonsense. It is not nonsense. It's a priority. You want to make money today, or you want to make after 10 years by actually making $1 billion revenue, right? You may be making a 1 CR profit on a 10 CR revenue, or you want to make a 7,000 crore revenue with a 100 crore profit. It's a two different thing. And that doesn't happen by cash flow. So the thought process is very important. Going forward, as I see that post this COVID, a lot of people are understanding this, what I'm sharing. Therefore, the digitalization approach would further enhance, increase, and people will adopt these recent changes which has been taken place across, and to be relevant, you need to adopt. You can't say that I won't pay GST anymore. Even if you choose, the systems are so strong, they will identify and your business will be shut in no time. So the back-end processes from the government is also very high and increasing. You all would be aware that for last 2 months, the income tax site is shut. Nobody is able to file their ITR. There's a reason, because Infosys is just sitting with them and making their system more stronger. Can you afford by not paying income tax anymore? The things are changing dramatically. And therefore, I see that is a great thing for the country, because traditionally we have not been a great tax paying country. Traditionally, we have been only focused on a micro market rather than a major market. And China always used to be a threat. I think so. Overall, post COVID, China is also going through this transition. It's a great opportunity, and you should not be worrying about funding. Funding aa raha hai. We already know that $21 billion has come in 8 months.
Right.
And this is the total money of the last 2 years, which India has seen into this, startup ecosystem. So it's just going to grow multifold. And it's good that many SMEs would be then competing with the startups in the same line.
Sure. You have some thoughts on this?
Yeah, just to add to that, I think we've seen that blurring actually. If we just look at historically what some of these, the trends in the last few years has been, we wouldn't associate Akash as being a startup, as being a technology brand, or as being any of these things. It raised capital to actually transition to exactly this, of saying the founders have now shown intent. We want to actually try to go down this ecosystem. We want to build for a very different type of brand than we have historically been. Went through that journey and led to a considerable exit opportunity for themselves. And I think the other part that's different is the startups are being built for most likely an exit opportunity or an IPO. They're not being built to stay promoter controlled. And I think that's when you're thinking as an SME of what this capital is. Yes, it's 21 billion that has gone into these startups, but it has gone into these startups to say control gets moved, or at least considerably shared with management team, by investors, by these other people who will start to have a fairly loud voice in how the business operates. And if that's a path you're open to going down, which cases like Akash showed, there are opportunities for you to actually create considerable value from this. The other aspect that I think it links to the earlier question you also asked, Ritu, saying, what is the impact of the Thesario models? I think the impact is also the fact that when you have these, in effect, buyout brands come to India, what you're going to see is liquidity getting created, not just for things that are labeled as startups, but it is for companies that meet certain metrics, which will include SMEs that were in this space, had started a D2C distribution because they were legacy brands, had good recall, and said, we can start selling directly. We don't need to go down the retail store and through distribution channels of other retailers. And they built that themselves, in effect, as D2C brands. And with that, you have these companies like all of the Thesario type models that have been built up in India, the Mensa, the Powerhouse 91s, that are in effect saying, I won't just value you based on what you're doing today. I'm actually giving you a multiple of your profit right now. They say, I'm actually going to be able to take the brand and give you liquidity, which is, if you think of how an SME had as an opportunity to do that at the stage that the Thesario brands are coming in, we haven't seen that in the market for any of our verticals in the past. So I think it's pretty exciting to see that, in effect, we're seeing private equity buyouts happening of SMEs now taking place. So that would be a pretty attractive change to come through, of saying, now as an SME, I'm not just building to say I'm profitable and that's all I'm going to get. There won't be another option. You will start to see these other options of saying that I could just sell my business and actually get reasonable value from that I can choose to do what I please with.
So do you think a lot of startups are likely to do an M&A with an SME? I mean, he just mentioned about Akash. So is it something of a possibility in the times to come?
See, I think so. It will happen invariably whether somebody wants to do it today or somebody would choose to do tomorrow. Timing is something one cannot, but end of the day, this is good, definitely going to be the thing. Because at certain level, a technology would have been there, but then you require a product to sell, and not everything can be built overnight for somebody who has built this business for, let's say, 20 years now. So it would be going to be a great marriage between the technology and the tradition, and that is something has not been happening for quite long. I guess it can only happen once a certain startup would raise to a certain size, and with the size it also is the tech capability, which now, let's say, we today are discussing, let's say, Baiju, which has done this. There would be many more going to come forward, and this year it has been classic one, right? We have already seen so many startups becoming a unicorn. That also shows that how well they are funded, and this is something going to be the thing. So I fully agree on this, that point, that yes, we are going to see that.
Sure.
And just to build on that, I think the other aspect that you've seen with, if you think of what the value of these SMEs are, the value is the brand. The value is that for 20 years as consumers, we have been used to saying this is what the value of, when I see this logo on, be it a Haldiram, etc., this is what it means to me. It represents quality, it represents trust, it represents what I can actually get as a product I wouldn't even think twice on in these verticals. And the reason the startups actually need to raise as much money as they do over this 5-7 year initial period is they're trying to replicate and compete with these brands that have been there for generations, really, and say we're going to be able to build that in a more condensed period. So, if you're saying any of these larger startups that get built out in certain verticals, will some of the other brands that have existed historically in those same spaces be very attractive to them? I'd say absolutely, because they know the consumer perception of those brands is extremely powerful, and that is something that in the long term, as these startups get larger, they will want to actually take on some of these brands as well.
Sure. Yeah, those would be interesting times to see what's really coming. So, Phygital has been a model of interest in the last couple of years. We've seen digital first models going in physical spaces, and likewise, we've also seen physical brands going into digital spaces. And overall, if I see, particularly if I see from a product perspective, or brands like a Pepper Fry or a Wooden Street or First Cry, uh, they all sort of have gone smaller in the size of the stores than what they used to have, and their objective is also to drive more tech enablement through their stores, which could be a smaller store to happen. And similarly now, particularly post this, I mean, I would not say post the pandemic, but yeah, amidst the pandemic, we have also seen even traditional retail brands changing their game. They are getting into more smaller but more bigger presence across the state or whatever city or region that they're touching, to ensure more touch points of the consumer. So my point is that with these digital models, how and given that every product company today thinks digital, they don't think digital only or physical only anymore. How do you think, I mean, at least from my editor's mind, I do feel that everybody is only eventually going to eat up into Amazon's share. And so what do you think, who is and how they are going to gain, and particularly how digital models are going to be more profitable?
So I guess the phygital model works for a particular kind of brand, right? It is not meant for all. Phygital would work, especially when you talk about a certain size of the store. That would be led more of a ROI, and you can only achieve ROI not by saying that how much do I sell in that per square feet. It happens because that brand discovery has already happened digitally, and you already have a certain kind of clients who would be buying those. So it's a matter of that convenience, probably, or a experience which you're providing through physical. But just because you have a physical presence, well, let's say you put a 500 square feet, store, and then you put also the same thing digitally, it is not going to sell like that, right? So it is not saying that only a small set of store would work. It's totally the brand target. The classic example, if one has to see in terms of a large physical and also equally a large digital, I mean, to me, is IKEA. If you look at IKEA, they would be sitting with lakhs and lakhs of square feet of
Correct.
places, And at the same time, everything is enabled. Even if you look at digitally, if you want to buy, you buy. You want to go experience, you can experience. But again, it requires investment, and brand is important. What kind of brand are you building, and what is the purpose of that? So it has those elements, but it is for sure that it is required both ends.
Yeah.
You simply can't rely saying that, okay, I will remain physical, no need to go digital. No brand is such. If you look at any recognizable brand, you won't find a situation where they don't have a website or they don't enable you to buy.
Yeah.
Indeed, now is going to be more international. That means if you know this is an international brand and certain particular model or particular thing you like, let's say in London, now that will be enabled much faster than the traditional way how it used to be, like a 21-day, 24-day, 30-day shipping. It is just going to change overnight. So you are not going to fight anymore at local, but at global, which is going to go much faster. So I guess it is very important to understand that your turnaround time for your product has to be much faster than the traditional way of how earlier it used to be.
Sure. And what should be the ROI sort of process or a structure that a brand who is looking to go one from the other side think of digital models? So if somebody is on digital side and wants to do a physical, what kind of ROI they should think while doing a new channel particularly? And same goes for the other way. I mean, if somebody is going from a completely physical setup to a digital setup, then how do they plan all that tech enablement and deployment of team, and to a certain extent, if in it would probably be an SME owner doing it, right? And if they cannot get a sense of what they're likely to make out of it, if not right away, then maybe at least 2 3 5 years down the line, it's very hard to make those kind of enterprise technology investments.
So, Ritu, just to give a quick point, is that there is no particular number one can quote because it is going to vary from different sizes of business and different types of businesses. If you look at Amazon, traditionally they have never been into an acquisition spree. They always say that we'll build it organically because of their sheer size. For a SME, if you're going to do yourself, that is both managing your physical and digital, is going to be really tough. It's going to be really cost, right? That cost will eat up a lot of margins, and probably it will take a lot of time also to make break even. So therefore, it has to be a marriage of your core competence and also using certain platforms which really drives your cost much down in order to make a much faster ROI. So again, today that ecosystem has been developed and growing faster. I guess one should be open to explore this rather than saying it's a cost, मैं खुद ही कर लूंगा इसमें क्या है. So then
No,
that
but
can
does
be
it
issue.
tantamount then to thinking that, if I am good at physical and I then want to do digital, then let me just put a different team or a different entity to it?
But
Then
Ritu,
do it.
that's where I think there's a slight difference. I think the blurring of physical and digital is actually to say, strategically think of where am I losing customers in my sales funnel? Where can I actually get some of these additions to come through? And you're seeing the people who have gone from digital to physical basically say, people have discovered me, they've seen the brand, they know what we are trying to represent. But there is a trust on these types of product categories. Example, the people want to understand that, okay, what will it actually mean? What are the dimensions look like? What are some unexpected characteristics that I cannot do unless there's literally a visualization that is right around me and I can just measure out specific aspects of this is where the rest of my furniture will go. It's in my house. So I need to physically go and actually measure these things out. So there are aspects, if you think of from the pepper fries, etc. These are the aspects that they said, okay, this is what we cannot do really unless we add the physical presence. So where are the customers that we're seeing dropping off in our funnel, and let's add those cities first. Similarly, if it's a physical brand coming in, I think it's a question of what are you expecting the digital to do. If we're saying there are customers who are already coming through to me, who know my brand, who are calling me and just really, I'm getting an incredible volume of phone calls that I cannot service to do home deliveries, etc. I think that's a question of saying, if that is the project I'm trying to solve for, and this is how I need to try to enable technology to solve, what are actually the best solutions for me to come in? Me setting up a full Shopify system and try to do integrations in there with separate logistic providers, that's probably a long drawn process and going to be a cumbersome experience for me. But it may make more sense if I tie up with someone like a DotPay and say, this is something that for my sector already has a cut and copy model that I can use to bring in. And just when a customer calls that I want to do a home delivery, can you do this? I just direct them to the website. It enables the staff that's there to actually be able to work more productively. My volume of orders that I'm actually getting through these models goes up. So inherently, it's got a pretty quick ROI. So I think it's a question of looking holistically, of saying this is where I'm seeing an additional opportunity come in and trying to identify what are the providers there that can really help you unlock value quickly. Because I think there's a business that's gotten existing operations. It's not a pure Excel sheet exercise of saying here's what it is. It's about saying this is where I'm seeing inefficiencies or potential drop off in my funnel that I can really add value to.
You want to add to it?
No, I totally agree. So the whole point remain that nobody stops anybody to just manage everything under the umbrella, but the core competence is very important.
Yeah.
And more than that, again, time and money. So how much time are you going to put behind that? It's totally depend on the scale. Amazon doesn't do it because they know that they have the entire capability built on and they can do it. But for somebody who might not have that, to go for that is no overnight learning. It will take time, and therefore whether you want to build your business or whether you want to build your competence in technology is an enabler. Just because you have a technology doesn't mean that your product will sell. That's a big misnomer, that you become a online person and then sales is just going to come walk in on the internet guy. No, it's not going to happen like that. End of the day, the effort of building the business goes invariably whether you are SME or a startup.
Correct. Yeah, no, I think that's very well put. Happy to take some questions from the audience, just as we sort of carry on this discussion further. Now, today there is clearly a demarcation which is coming into, the kind of entrepreneurs, particularly, I have been seeing there are young entrepreneurs, very aggressive. They're all there out to say that, because they're digital, so they want to capture the world really, really fast and get customer base on board very quickly. So, do you feel somewhere business practices are getting compromised? In terms of how customers get acquired, are they real customers? We've been, seeing content about, the customers were fake, reviews were fake, or whatever. So, what kind of eventually you feel business practices will evolve, which will give the customer a real picture, and the customer would be real as well eventually. So how do you think that is going to happen? Do you think there's going to be more regulated in that sense to see that nothing like this comes to happen?
You want to go first?
Yeah. So I just say, Ritu, on that, I don't think there's. I do agree that there are those issues coming through, and I wouldn't say that becoming more prevalent as a percentage. I think you're just seeing so many more startups getting built out, so many more of them actually be able to attract capital, go to a Series A, B stage. So you're seeing probably the same percentage just amplified over a much larger base, which is why we see it very visually, very clearly as often as we do. That being said, it's the same problem in the US as well. I mean, there's marquee investors who invested in D2C brands there that had come out with issues that they basically booked sales to a store, returned it, and kind of recycled sales to the same store, and as a way to boost financials. So improper financial practices, we can't completely wipe that out. I think there will always be people with bad intentions that will be a part of the market. But that being said, I don't think it's a considerable percentage now, and at least from our perception, doesn't seem like it's increasing. And regulation probably isn't as much of a fix to it as the thoroughness of those own investors of saying, okay, this has started to happen. We need to be more conservative. We need to understand these types of metrics, business practices. We need to speak to more customers. I'm sure from all of our sides right now already, where India is a market which is a bit more kind of conservative in how we do risk assessments. So I know all the other investors also do calls with multiple customers, cold calls with customers that have not really been shortlisted by the company before we're investing. So that's a standard practice that we're going through. But what I just say is from the founders' perspective, it's not just young founders. I'd say the founders that exist in the market today, be it either young founders or more experienced ones who may have already worked with the likes of a Baiju, an Urban Clap, and stuff, you're seeing much better quality founders than we did 10 years ago. And that's actually, I think, the most exciting part of the industry of when we say what used to take you 5-7 years to actually build out, because there was a lot of understanding of what it meant to build organizational systems, build hierarchies, build strong processes internally. It's not just the ones who've left the larger companies, but even the ones, if you compare a relative fresher now to one that was 10 years ago, the ability for them to actually learn from the ecosystem, because there are these mentors, because there are angel investors who have worked in these startups who can actually guide them on these are challenges you will face. The ability to build that organization that used to take you 5-7 years, you can probably build it in 3 at this point. And that's the most exciting transition of saying strong processes, if you actually have the right guidance, can actually come through much quicker, and it can drive returns much faster as well.
So Ritu, I mean, as far as the regulation or clampdown is concerned, I guess It is quite evident. We know the examples, what has happened in China on Alibaba, and even in India to an extent, if you have to name Twitter, it is invariably going to happen. The point was, in a traditional setup, anyways, the businesses were managed so much and so much regulated. This technology, business government never understood. So, they flourished like no tomorrow, and therefore we see that they are able to do much faster scale than anybody. But, it's never easy going to be for anybody. As I said, and government is always keeping an eye. I guess this couple of years, government understand the importance of technology and what it can do. And therefore, there will be certain rules to be followed, and which can be a deterrent factor to a certain extent, which would not allow you to scale that fast because there are certain things which you need to comply, and that compliance definitely would have a cost or probably a way of doing the business. You can't say that now the way how in US Google operates, that's the way they will be operating in 138 countries. No, it won't happen now anymore. It used to happen to a very, very large extent, but everybody is now recognizing that this is very important. Protect your own country IP, protect your own country, market. You simply can't open the market like that and kill your, golden goose, which is the, the thrust of SME. Now, coming back on the, the practices in terms of, young founders. See, I would say uh, it does happen in all kind of businesses. It is not that certain kind of people only do it. Very fact that you won't be able to go too far, right? If you look at the large companies which have been successful, they definitely have a very, very solid practices which are keeping everything in check, right? Whether it's government regulation or customer, making customer happy. So you have to eventually think long term. To start your business, people try to do everything because either they are focused on building valuation in their business and they just want to go for numbers. Eventually, people are smart, they would, figure it out, and you will be done in no time. So I would not say that one should be looking at those, but yeah, people do it, and it happens, in all kind of, environment, as we know.
Sure. Happy to take questions from our audience. Yes, sir. Can you please pass on the mic at the back?
Hi. Curious to know if, since last year, if you've invested in mental health kind of space or startups, and also, are you now treating mental health as social impact, or where does it stand?
So I can take that from our side. I think we have always considered that to be a very important sector to look at, but there's some challenges with just the Indian market of saying what we're willing to pay as online consultations, I think medically in general. So if you look at the telemedicine companies that have been built out very broadly, you're seeing a lot of them uh, get the value actually from product sales, and that's where the profit and a lot of the scale is coming from. So saying you can build it as a B2C brand in India, I think is a challenge to say from a domestic sense that those models have strong replicability. That being said, we're still kind of actively tracking that space, seeing if something changes, if there's an innovative version of a model that comes out there. But I think globally, you're seeing that is starting to change from a B2B sense. And you're seeing a lot of employers taking this on for a full company. You're seeing some startups that have raised considerable capital, being valued also very strongly, that have been able to build themselves on B2C brands and some B2B brands and some B2C, which are more app-based, which are kind of a more conservative marketing strategy, but are broader in kind of their offering. So I'd say it's a space we'd probably, and not just us, but a lot of other investors are looking at as well. But the concern is just how deep will the market be for just the consultation, because even the telemedicine space more broadly has seen the product be a key driver of how profitability and scale in that model gets driven.
Okay. Any others from the? Okay, so we have time for one last question amongst us. So, one of the areas which I feel that has, I'll tell you about a conversation I had with Fireside Ventures in 2015. And I remember at that time they told me that, if a D2C brand touches 100 CR, we'll think that they're almost like a unicorn of a tech company. And today that same figure of 100 CR has moved to 500 CR. So, and this was it's been there for some time. D2C has been happening for a while now. But suddenly it has taken up. The sport has been like, particularly from last year, it's been like accelerated to another level. Do you see any such sectors which are, I would say particularly, it's a mix of startup and SME really in its entire business model and the product approach? Do you see any such business models out there which could see a similar kind of, sharp peak in the coming times?
See, the sectors rotation keep happening. If you look at the most recent example I can think about, in this country, nobody would have thought that edtech would be digital or it would be adopted so much.
Hmm.
It's one of the highest funded sector in 2020, 2021.
Correct.
And if you look at a country like India, especially India, where a lot of population is also there in the rural and dependent on government schools, why on earth somebody would be putting their money behind edtech companies where that there is not enough connectivity itself in the second tier, third tier city, right? It's quite taken. But you see, that's not been the case. It has totally changed dramatically, the same way how you are saying that 100 crore to 500 crore mark has changed.
Hmm.
So change is going to be the thing. I guess there's no particular sector one should be looking at it. You are in a place where things have just started, right? And when you are looking this kind of capital coming to this country, there are huge number of problems which as a country we are still facing it,
Hmm.
right? Now the only point is that which one would attract capital and which will go scalable faster. We are all always are hunting that. I would say this year itself we have also invested in edtech. So it's very clear, जहाँ पानी का रुख होता है वहीं पे ढलान बढ़ जाती है. So investors भी वैसे ही होते हैं, कुछ different नहीं होता है. So I guess it is just a matter of the cycle which keep happening. Agri tech, another thing. I mean, on agri side, who would consider that this technology can really do anything, right? People would always say physical hai, farmers hai. What is the scope? If you look at again the funding data, at agri-tech has been again the top three funding again in 2021, right? Nobody would have anticipated, and we are talking about billion of dollars. It is not like small money. So I guess things are just evolving in across the sectors. One should not get just limited, but just thinking that it is not possible. I think so. It is possible in both the SME side, also in terms of your physical side. One of the example I can quote where both of our portfolio companies are there, where we are invested, is a company called Big Hearth, right? They're an input specialized agro-tech technology enabled business. What they do, they enable all the farmers in this country sitting at their place, ordering what is required to put in the farms, because there are a lot of things which goes to grow those things which we are eating, and to have those, it is not available all the time, because there is again a traditional set of infrastructure mechanism which has been laid out. So certain places one is getting that advantage of the availability, and certain places it's not, right? Now to nullify that so that across the India the productivity is high, it is important to have that digital adoption. Now you expect farmers to download the app and book it in the world. 5 years ago somebody would have come and sitting and said कि farmers download karenge, they would be laughing like anything. But today is the possibility that they are doing it, right? We ourselves have seen this company growing 3x in a matter of 6 months, right?
True.
So this is what is happening, and I guess as to the answer, the straight answer, yes, it's just going to keep happening across the sectors.
Why do you think edtech got more money than health tech?
So I think it's also a perception of where the consumer sentiment is to actually spend. If we look at just how the healthcare models are of when we spend when it's really needed, when there is a dire situation, which as a health tech company, you probably can't serve. That is where the profit pool, the revenue generation is what is being serviced by a hospital. When you're looking at a ed tech spend, where we are actually coming in as saying, there was always this tuition market, there was always this entire extracurricular of the core curriculum teaching segment. And that's where it has really evolved from, of saying, where will people already spending, where all you're saying is you are anyway spending for this same product, and now we're just trying to move it to a digital spend. And that's the transition EdTech was able to pick up much quicker than healthcare, because you're not saying that same portion of what you're spending on a healthcare that I can really switch to a digital aspect, because where nationally we spend is really that last portion of when you need to go through a surgery, etc. As we get deeper into the spending, and Abhishek talked about this earlier on as well, of having a larger discretionary spend, as we get deeper into doing more preventive aspects of our healthcare, as we get deeper into insurance actually having more relevance in our healthcare aspect, I think that's where you'll see the transition really come through from a healthcare aspect of saying, now these models who've already probably been built up, will start to scale up very rapidly.
Sure. Do you see health tech is going to see its peak in the coming year, maybe a 2?
So again, Ritu, as I said, that these are very large problem to be solved. Peaking out is it's not going to be the thing for any sector. It's just going to grow. The only point is that certain sectors might attract a lot of capital in that particular year, because a lot of change might be happening from the government side also.
Yeah.
When I say agri-tech, it happened only because there was a lot of thrust by the BJP government last year, and they have done a sweeping changes, right? Whether that is right or wrong is not a judgment call, but that's something which attracts a new range of capital. For the same reason that something dramatically shifted.
Yeah.
Because of COVID, edtech has moved up, because in a physical world you can't see students going in and studying, right? The model has to go evolve, and that has happened. Health tech is also the same thing. I guess it has to happen both from a service point of view, because we already have seen the crisis which has happened across the country in terms of the infrastructure availability. And probably we are spending more on the warheads by putting those tanks on the border than actually building hospital in this country. So I guess that shift has to happen. It's going to happen in the next 5 years. I see that government will be spending a lot in the health tech, and therefore it will be a lot of opportunity in the health space, both in the physical and the digital space.
I think that's a great point, especially on the regulation change, Abhishek, because when you look at what has actually worked in the healthcare space, you're saying it's the pharmacies, the 1mgs, these companies that were in effect illegal for most of their lives. Suddenly the gate was opened of saying, this model is actually needed in the country today. We need to actually change the regulatory setup in how they are perceived, and open the door. And you've seen just how that has enabled them to go from companies that were still growing well, but really not really the core focus, to now Pharmacy buying out one of our largest diagnostic chains as well.
I'll tell you one interesting thing. I don't know if many of you would know this. 5 years ago, if you were selling medicines online, that was illegal.
Yeah.
It was not allowed by the government of India's law, because that can bring a lot of things. You require prescription to buy, and on online, how it is possible. Today, everything has changed, right? So that probably can enlighten that what is happening now.
So it eventually also boils down a lot to the regulations that are, and the role that they're going to play. I think this was very interesting, and I'm actually quite looking forward to the new set of changes that we're going to see in this country, given the fact that, already, I mean, honestly, you say edtech, but at the minute I saw edtech investments being made, and I have very young children, 10 and 12. And I was wondering, how many hours am I supposed to put them in front of the screen? And despite all of that, as a concerned mother, and probably one of many out there of young school-going children, you've still seen an industry seeing that kind of investment and that kind of growth. So, in business, it's always, as they say, that the best is always yet to come, and you never know what is just going to fundamentally take up over there. So thank you very much, gentlemen. It's Shiva, it's been wonderful talking to you.
Thank you.
Abhishek, always a pleasure speaking to you and raking your mind about what the future of investments look like. But certainly, I think one thing I'm beginning to sort of get a hint of is that startups and SMEs are almost going to go a similar trajectory, particularly in the coming years. So the capital not coming to SMEs and only going to startups may not just be the case. There is more than enough capital out there. It's just about how you go and approach that capital. So any final words from your end as we wrap up this session, Shiva?
I completely agree with that last comment, Ritu. I think that blurring is something that we have started to see and will really see now getting deeper in the market as that's coming through. The most exciting part of what actually is going to build out from our ecosystem really is yet to come.
Yeah, that's true.
We are at $2.8 trillion economy somewhere. Next 10 to 15 years, we'll be sitting at least towards $10 trillion. It's a big number. Opportunity is very big for the country. What we have achieved in the last 70 years, the next 15 years is equivalent to much higher. Therefore, one has to be open to learn, and then grow. One has to think about scale. If you're not thinking scale, you will die down very soon. So that's the only thing which I think is relevant.
Yeah, totally. So thank you very much, and thank you for joining us. A huge round of applause to them. They are thinking and dreaming of a $10 trillion industry or a economy in India. So I think it's time we just sort of tie up our laces and start getting towards it. So thank you, and hopefully we'll, as I say, inshallah, we'll see this really happening out there in the market.
And yes, we'd like to present the mementos to gentlemen. Can I please request the lady to get the mementos and Yes. So this, as a token of love and gratitude from us, we'd like to present it to Mr. Abhishek Agarwal and to Mr. Shiva Shankar. Thank you so very much, gentlemen, for joining us today. It was quite an insightful session. We had so much to learn from both of you. Thank you so very much. And yes, we can hear final applause for them. Thank you. Thank you so very much once again. Thank you, Ms. Marya. And with this, I'd like to have everyone's attention towards the screen once again. Ladies and gentlemen, before we present the next panel discussion, I'd like to play the video by Rare Rabbit once again. Let's have all the attention towards the screen, please. All right, thank you. With this, we proceed with the final panel discussion of the day. Ladies and gentlemen, as I feel and as I think you would agree, we are going through a pandemic and innovation is now no more an option. It's not just about products or services. It has now evolved to be all about the way consumer behaves today. Our next set of panelists would dive into what is the next big business opportunity and what will fare well with today's consumer group. Ladies and gentlemen, I'd like to invite our first panelist for the day for this session. Please welcome Mr. Nitin Sharma, founder and CEO, Go Waterless. Can we please welcome him with the hugest round of applause? Let's do it together. I now would like to invite Mr. Ram Singham, CEO and founder, Vistan NextGen Private Limited, to join us on stage, please. Let's hear it loud together. Mr. Varun Gupta, founder and director, Zorgers. I'd like to learn the right pronunciation. Zorgers. So Zorgers, Mr. Varun Gupta, founder and director, is here with us. Let's welcome him together, everyone. Mr. Akshit Bansal, founder Static, to please join us on stage. Let's hear it loud together as we welcome him. Mr. Rahul Dhyani, co-founder and director, The Complex Smart Theatre, to please join us on stage. Let's hear it loud together, everyone. Mr. Anish Patel, co-founder and director, The Complex Smart Theatre, joining us on stage. Let's hear it loud together for him. And of course, to moderate the session, we have the one who's absolutely knowledgeable enough, Ms. Ashita Marya, ladies and gentlemen, CEO Franchise India, joining us on the stage. Let's hear it loud for her as well. Together, everyone. Over to you, ma'am.
Thank you so much for that, and welcome everybody. Please have your seats. Today, as she kind of put in the note together that whether in COVID or not in COVID, innovation is the key. So today we have a lot of innovative ideas that we're going to discuss, and understandably to understand as to how and where the growth can happen, and how we pivot, and how we can go hyper local, with the help of the businesses that we talk about, which are futuristic in nature. So we'll start with Nitin. Yeah. So how did the concept of, understandably, we're losing water everywhere. South Africa has gone to a point wherein, there are the drops of water that they're counting, and at one side they're flooded. But, we still have very less of water. So how did this concept come in, and how do you look forward to kind of, penetrate it uniformly across India? Because that looks like to be a good concept, but then it has to be competitive, for people to adapt. So what is it that you've thought about the business that would help the franchisees to penetrate further?
Thank you. Thank you, ma'am. Actually, this idea started, my background itself is of an automobile industry. I am into workshop, I am into tire trade, battery trade. So my family business itself is of automobile. So this idea came into mind when I first, in my own workshop, I faced the issue of water scarcity in my workshop. when we do the service of the customers, we wash the car and give it to them. But in 2016 May, I first time there was a scarcity of water in my own workshop. So I was not able to clean the cars of my customers. So obviously there was some unsatisfaction in the customer's mind. When we do the service of the car, they expect the car to be very clean when we deliver to them. So that was the first thing, but it was just a matter of 20-30 days. So in June, when the first monsoon came and the water level again, we expected that the water level, ground level would have, again, the water level have recharged. So in 2017, again in summer, it happened. That time I took it very seriously. So this is a matter that every year this will be the issue, and we need to bring some solution. Even our customers told it is your responsibility, or you need to look out for the alternate. We need our car clean. So the idea came that we need to do something. So I did a lot of research, like how we can do it, how we can clean it, what are the other alternates that without water, how we can clean it, or with less water, how we can clean it. So there were a lot of concepts. Actually, my uncle also is in US. So I discussed with him, is there any substitute of this, how we can clean it? So there were some solutions. Waterless car wash was there from around 2010. Waterless car wash was there in the market, in the US and UK market. It was there. But in 2013-14, it completely it had a lot of negative impacts on the car. There were scratches coming into the car. There were spots coming into the car. So people with unsatisfaction of the product, they stopped using these products. So from 2013-14 till date, there was when we started this initiative, on 2017, till that time there was no best alternate. These products were we can say that these products failed in the market. They were not able to deliver the exact thing, the purpose what they were brought in. So we trigger out what was lacking behind, why did they fail. So I worked with a lot of experts. Since I'm in the automobile industry, I worked with the paint expert, I worked with the automobile engineers, the chemical engineers. I worked with all of them, and I made a team, and we decided to bring a solution to this. So we started researching of some alternates. Then we came into a formula of Ayurvedic medicine. Like, Ayurvedic medicine doesn't harm our body. If we have any issue in the if for the treatment, that treatment will be cured, but it will not have a negative impact. From there, we picked it, and we thought of, let us make some natural product, because the paint is getting spoiled, or these spots are coming on the paint, and the material is not able to pick up the dirt from. Basically, concept was to make the dust particle pick up and uplift from the body, so that it doesn't scratch it. So how we are going to do that? So this is the concept of nanotechnology, physics and chemistry. All three were applied to this product. And since it is a natural product, the product actually we have developed is from plant base. It is not a chemical. We have not used any chemical into it. So because of that, it is completely safe for the body, also for the kids also. It is kid safe. Even when the kids sit in the car, they touch the dashboard, and with that same fingers they eat whatever chips and biscuit they. So that chemical also go into the body. And when we wash the car, the chemicals also drain into the sewage and end up in the groundwater also, and in the rivers and oceans also. So all these negative impacts that were bringing, the products were bringing. So we brought a complete solution to everything, one-stop solution for everything, that environment also will be safe, the car also will be safe, the kids also will be safe, and there will be no side effect. It took us around 2 years for us to develop this product, and in mid of 2018, we were ready with this product. We tested it first. We tested it in our own workshop. We tested it with our own friends and relatives' car. And for till August 2019, maybe near about 9 to 12 months, we tested this product before bringing it into the market. We tested this product, and once we were completely satisfied that now this product is good, no side effects were happening, no paint was getting damaged, there were no scratches to the car, and when we were fully confident, then in October 2019, we came into the market, and in 3rd October, we registered our company, which is Revolution Ventures Private Limited, and our brand name is Go Waterless. The name itself says that it is similar to this, that go waterless, don't waste water. When we have brought in this concept, we have brought in this technology, that now we can clean the car, and not even car, actually this is a multi-purpose cleaning product. Even we are trying into the solar industry also. We are in conversation with a company who's a US based company, who wants to try this product to clean the solar panels also. So now it is not restricted only to car wash. It was brought in for car wash, but now we can clean any vehicle. And the future, what we are seeing is cleaning solar panels, because there are huge number of huge volume that wastage solar panels also. So we are looking to tap that industry also. And even we are trying to replace Colin, the Colin which we use for home cleaning purpose, that also is a chemical based product. So we are trying to replace Colin also. So this product will become a multi-purpose cleaner. You can clean any surface, and it will be a completely natural product without any harmful and side effects to any surface. And even I tried cleaning my refrigerators, sofas, any tables, and everything can be cleaned properly without any. And it gives a shine also. It gives a beautiful shine which we cannot get in cleaning with Colin or water.
So, is this product patented, completely made in India?
Yeah.
That's
Yes.
something which
Yes.
is it. So, are you taking an approach of going hyper local, because something like this is needed in so-called, every lane and every house? So, if we go
Yes.
there, so what role a franchisee is playing, and how aggressive are you in terms of going hyper local?
Yes, right now, actually, we are not into the product selling concept. We are not trying to sell the product. We are trying to sell the service. The franchise model also, when we introduced this product and we thought of bringing it into the market, two things came into our mind: that if we sell the product, then customer will just buy it once and he will be lazy enough to clean his car. So at that time, what he needs someone to clean his car. So coming into the service industry would be more feasible for us, and it will be a long-term relation with the customer if we are giving him the service. Because before this also, a lot of products failed because customer would have brought that product once, but he will not use it repeatedly.
Point taken,
Yeah.
because in
Yeah.
India we have a lot of, we're fortunate,
Yes.
to have
Yeah.
being serviced
Yes.
by people. Okay, so what is your network currently, and what do you look forward to do till, say, this financial year?
Yes,
Current
actually, it is a good thing that we expanded rapidly during the pandemic. Before the 2020 March, when the first pandemic came in, before that, we were having just one franchisee in Nagpur. And during the pandemic period from March 2020 to June 2020, we did extensive marketing, online digital marketing and everything. We promoted the brand, and we were able to sign up 18 franchisees within this duration from March to 18. And at that time, people were shutting down their businesses. A lot of businesses were in loss. Nobody was thinking to invest in another business. They didn't knew how many days this pandemic will be there, whether it will be for 1 year. So whatever money people had, they kept it very safe. They didn't want to put it in any new business. But we were lucky enough to onboard 18 franchises during that period. And when the lockdown opened in June, from there, again, the growth started, all the operations of a franchisee started. And after that, no, we didn't spend much on marketing. Word of mouth publicity, what work our franchisees were doing nearby city, they started taking franchises when they saw that this is a very good concept. So today, as of today, we are having 74 franchisees across India. And now we are getting a lot of inquiries from the overseas market also, from Australia, New Zealand, Jakarta, Italy, Canada, Nepal already we are starting very shortly. So we are getting a lot of from Egypt also, from Dubai also, Qatar also. We are getting a lot of inquiries from the overseas market, but we will take a 2-3 months time, because we need to do our to export the product to other countries. No, so we need to do our internal formalities. So once we complete the formalities, definitely in coming 3 to 6 months, we will be exporting our products to other countries and starting our franchises also in the global market.
Sure. So that's interesting. So that is something which is need of the hour.
Yeah.
And it's good that you're starting now, and people are joining in. So hopefully we would waste less water, and it's interesting for
Yes,
a
yes,
franchisee
and
as well
even
to go
I
on.
feel very proud to say that even the government is making some government is actually planning. I've met I'm in conversation with the Jal Shakti mission, We are in conversation with them. I've met Nitin Gadkari also 2 times, and we are trying to convince the government, because government's motto also is to save water. And the report of Niti Aayog, which says that India has only 4% of fresh water which is available across the globe, and after 2040, 90% of the population in India will not have drinkable water. No safe drinking water will be available. That means only 20 years are left for us to become active and try to save water, act now, and try to save water in any way. So government is also trying to, in rainwater harvesting, catch the rain, and a lot of stuff are going on. So we are telling the government that India is having 25 crore cars in India. There are 25 crore cars in India. So with this initiative, we can save around 2 trillion liters of water. Only I'm calculating the figures are only of car wash. We have not included two-wheelers also. And the next phase, what we are coming in, we are in conversation with lot of electric vehicle companies also. Now we have started in conversation with the electric vehicle.
Their cars with water.
Yes. So that is they also needed this option, that there should be some option that where we cannot use water in our cleaning of their vehicle. So we got a very positive response from other companies also.
Akshit also here,
Yeah.
So I think
So
we would need.
Yes,
You guys
definitely,
can
definitely.
connect on to that.
I plan to have a separate discussion with Akshay to take this forward, and how we can collaborate, and we can collaborate with other manufacturing companies also who are directly manufacturing the two-wheelers. And now two-wheeler market is going to become a very huge market, and India will be leading this two-wheeler market. As you know, this Ola is bringing the mega factory, which will be the largest production of two-wheelers in India. So we have a very good future. And we have a lot of verticals where we can take this product. It is not restricted to only cleaning of cars or two-wheelers, but it will be a multi-purpose cleaner.
Sure. Great. So we look forward to your growth.
Thanks
and being a part of that.
Thank you.
So we would understand from you, Mr. Rang Singham, we're meeting for the first time. What instigated you to make robots? I mean, and what is it that they do, and how they can help in any kind of a category? I understand that you're doing it in food currently, but is it possible to do it in any other category, and why in food first?
Okay, good question. Let me start the background of mine actually. So I was there in UK for last 20 years, and I met Mr. Modi in 2017, and his point is like, everyone abroad. So when are you going to come and serve? That was a very nice discussion. So which inspired me, like why can't we go to India and start something which is unique, which will help to as part of the Atmanirbhar Bharat. At that point of time, we have found that cognitive technologies, especially in artificial intelligence, machine learning, and robotics, we are lacking. We are behind almost all 20 years, comparing with any country. So on that note, we have established our organization in 2019 in Hyderabad based, and our main motto is to look at into the which particular industry we need to work first. Social, as part of the like industry classification, we have seen as a warehouse is one of the industrial based. Second is social humanoid robots. The third one is a service robots. So three classification due to the pandemic. Actually, what we have found is which particular industry is lacking the resources, and how can we able to attract the customer. So food industry, where the restaurants is literally suffering to attract the customers back onto the normal. At that point of time, we have thought of like, why can't we deploy a restaurant robot, which is a serving robot. I'm not saying I'm a new one, but all I'm saying is the people are importing from China. As you know that there are a lot of issues with the China. So we thought we want to focus on delivery robot.
We support complete Make in India program.
Yes.
So all of us here is like completely
Atmanirbhar Bharat, Make in India. Yeah. So then not only that industry, we also, during the pandemic, actually, we also supplied a lot of robots for health industry as well, food serving, and also the hospital cleaning as well. With the UV tubes actually going on autonomously and cleaning the wards actually and serving the food and having as a digital on one-to-one like a doctor appointment thing. Actually, we have done a lot of things in India. Apart from that, we are also making a robo teacher, which is going to be assisting the teacher. We are not replacing the teacher. We are just creating a robot teacher as an assistant. And apart from that, industrial robots also we have manufactured almost all around 7 varieties of the industrial robots, which can able to take 1 ton to 5 ton capacity of payload, and it can move one place. These are all repetitive jobs and hazardous jobs, which will be like it's not human friendly. So we have focused on that. And apart from that, we are also developing as a social humanoid robot, which is going to be the first in India. it's kind of like, what you have seen so far is in China and other countries have developed. But
We've seen that in Japan in
exactly,
India.
Honda one. Yep. So we are making it as a similar wine kind of thing. So what we see is there is a huge potentiality not only in India, we also see the exports. So we have got almost 80% of our products are going to be export. As me coming from Europe, I've seen the huge potentiality for the industrial robots. So we are tying up with multiple companies in US and Europe, and we are going to start an exports.
So what is the opportunity in India? So, currently when you're saying that you're running this restaurant with robots, so you expect franchisees to do that and use robots in that way across India?
We are looking for the B2B actually. So we're not doing it in a B2C. So we want to have in a multiple distribution locations so that, so it can reach it to the even small town B towns as well actually, because currently we have catered almost around 12 restaurants across in South India. And we are looking at the north as well to expand it. So we are looking for the master franchises and metro franchises and district-wide franchises we are planning to.
Sure. So yeah, that's a good idea, but that has a, so-called negative impact. One of the questions, which is a big debate, is that we are the second largest populated country and going to be the first very soon, the way we are going. So, it creates a big, pardon them, it happens. It's a big debate that, we have a lot of humans available and they can be skilled, so why robots? But understandably, since we have a lot of people, we have a lot of, service needs as well. So, I'll certainly take that debate topic with you on, a next one. So thank you so much for that. And that's a very interesting concept. And we'll go to Varun now. A very interesting thing. Everybody, us, we have parents who are aging, and most of us do not stay with our parents. So we need, home care.
Right.
Not just here, we need home care everywhere. Particularly in India, I would say, because our generation is going to be seeing more older generation within next 5 years. So our demographics work like that. So what is it, that you do? And I feel that can be extremely hyper-local in nature.
Absolutely.
So
Absolutely.
if you could share that
Firstly,
with
thank
us.
you so much for giving the opportunity to talk. I think I'm really surrounded by the very, very innovative people around. I think my idea is very simple. I think something I get driven morely by the pure emotions part of it, right? So the journey itself has started from very personal experiences in the life where, I have seen something happening in my life during the childhood, losing my father to an extent that, during my job days, I have seen, how difficult it is to take care of your loved ones, especially when there is a healthcare episode back at home, right? So I think that was a triggering point for me. I think talking about the industry, I think it has, as you rightly said, it has an immense potential. It is the need of every home for now, right? We talk about somebody who is like more of having an elder at home, or they have some kind of a patient at home, or there is a child at home. So कोई ना कोई तो किसी के घर में कोई ना कोई होगा ही, right? And finally we need, today also we are taking a care in one way or the other, and normally the model works like a family caregiving model. We are in Indian, we are highly structured joint family cultures also, and then we are very, very well connected with our roots, largely I would say, but things are changing big time. We say that now the India is getting affluent, right? So the most important thing which is happening is the migration is happening from tier B to tier A towns, tier E to metros, and then people are becoming NRIs in nature, right? So all what we are left behind is the our parents in an old age, or then or I would say especially in a situation when we say there are patients at home too, right? So it is a difficult subject. So, but yes, something which we have done really, really proud of is that we've been able to structure this industry very well, right? So I think we have our own humble beginnings in terms of being bootstrapped for quite some time. I think being able to grow the business very significantly from Punjab as one of the territories. So the ground has been the Mohali in Punjab from where we have started, and to now growing up to 10 cities, and I would say 4 states by now. And franchise is a very new thing for us otherwise, right? But yes, I think the whole idea of franchise is to make sure that, because when we have very closely monitored this business model, I think what we are looking from a franchise is a pure partners, right? This business model is highly hyper local. It requires a lot of the local synergies in terms of understanding the regional dialects, in terms of the I would say the behavioral aspects, the societal aspects. So there are a lot of things which are involved. So hence is the reason why the franchise model is something which is really exciting and the need of the hour, right? In terms of the art support system which we bring, it is primarily we are talking about anything right from an old age care to a the complete ICU intensive care systems at home. So we are a direct to home service provider wherein we are providing anything in terms of healthcare professionals. It can be qualified nurses, it can be the professional caregivers, it can be in the form of doctor support which is available. And then finally, what we're talking about is the healthcare infrastructure with the form of equipments, right from a basic bed support to a highly intensive, like an complete ventilator kind of a support systems at home. So one of the product category that we typically also do is something to be called as a palliative come end of life care, right? So this is something which is a highly emotional subject again. So where we say that somebody who's already aware, the family is aware the person we are going to lose, right? But still we want a tender care at home. In India, nobody wants to die in a care home, or I would say in a hospital environment. Everyone wants to be at home, right? So it is a life phenomena, I would say. But yes, other than these facts, I think the most important element. So we say that there is a direct to home, there is a healthcare infrastructure that we do, both with the the consumers at home, and now we have started doing it with the institutes also. Like we provide a lot of hospital infrastructure to hospitals also, and to an extent now after this pandemic, the trends have changed. The people have started opting for where the corporates are wanting, there is a workforce of say 100 plus people corporate, so they are wanting to set up the medical rooms within the facility, right? So there is a nurse which is available, there is a minimum healthcare infrastructure which is available to take care of, so that even when my employees are at a workplace, so the basic things can be taken care of.
Yes, that's something which has been mandatory of late. I hear that an establishment like this also will have a first aid and a doctor care.
Absolutely.
Yes, availability there. So how do two things? It's hugely unorganized right now,
Right.
and unorganized and not really dependable. So how do you address that? And how do you make sure that your franchisees keep up to the quality that you would want them to?
Absolutely. So I think, this again boils down to the experiences in the process, and now I would say technology also, because something which we have learned over a period of time. So we have tried to make sure that there are well-defined clinical as well as the non-clinical processes. Like especially if we talk about this industry, the biggest challenge that we have to address is the continuity of care. Besides the fact we talk about security and reliability, but I think if you ask my experience, I would say the continuity of care. Like for example, मैंने ओपन मार्केट से किसी को हायर तो कर लिया, व्हाट इज द गारंटी कि कल मैं कल मेरी फ्लाइट है, सुबह दिल्ली जा रहा हूँ, तो एकदम से पता लगता है कि घर पे आज जिसको अटेंडेंट को बुलाया था वो आया ही नहीं, रिपोर्ट ही नहीं किया, राइट? सो दिस इज वेयर द आई वुड से the reliability becomes very important, the continuity of care becomes very important, right? So I think this is by the fact of the sudden procedures that we have defined, or processes we have defined, in terms of how many people to be hired, how to retain them, basically the training plays a bigger role, the counseling play a bigger role, and then the technology itself to be able to track the people, to be able to ensure that their skills are being upgraded time to time, right? And with the right amount of the wherever required, we do have a lot of healthcare infrastructure. So not every time that like for example, if you have to go to a hospital for something specific, so then you have even a doctor who is available over a call, guiding a particular nurse or a doctor, or a nurse or an end resource for that, right? So I think the biggest challenge in terms of the continuity of care is getting addressed by the virtue of both processes and technology that we have been able to address. And then in terms of typically security elements, security is that we are tied up with the most of the the latest innovation which has come in terms of their companies or even the government, because one, we are a placement partners to most of the ministerial programs where we directly intake the people from government of India, like schemes like DDU GKY or PMKVY, who are training the healthcare workforce. We are directly sourcing from them. So that's the one of the biggest thing that we do, and it itself is a validation to our security elements that we do, plus an in-house training program which is minimum for, I would say, 10 to 15 days.
Sure. When I first thought about the home care, it gave me an understanding of how people like Starbucks or a Cafe Coffee Day, that they train baristas. And they're a very interesting system. They have credit systems with them. wherein if you do not attend a cafe a day, you lose a credit, wherein you were supposed to. And when you go to a next outlet for a hiring, you're being judged, on that credit list system, at least for that company. And all the, cafe lattes and, tea backgrounds have kind of integrated their systems and they work and hire people on credits.
Absolutely.
So that is something, which enticed, that they can be done in India, but
But
we
yes, I
know
think
how
just to add here, what we
Yeah.
have done is that we have started creating something to be called as a Caregiver Association of India, where we not just ensuring that what manpower is available with us in terms of healthcare professionals, but rather any organization to that matter who intends to organize this sector or even the open market. Like say, for example, you don't want to hire the managed service provider like us because of, let's say, affordability, right? So you can still log into our platform and look at the ratings and review of a particular caregiver, right? So at least that mental piece is always there, so that you ensures that whatever whoever you are hiring is well trained. What are the previous rating and reviews of those particular caregiver? So this is, we are trying to do an initiative which is Caregiver Association of India.
Sure. That's very interesting, and I think much needed care that defines, that the kind of, industry that you're referring to is huge. I mean, I think nobody's even calculated, what trillions we're talking about here.
Absolutely.
But it's
It's
going to be
we're
really
talking
huge.
about almost 10% of geriatric population becoming almost nearly 25% by 2015.
Exactly.
Right? So it's a huge number, and a lot of things, a lot of the technology has to play its own role. But fundamental problem of providing the right care at home is a huge industry.
True. So I think there's an immense potential, of where you've started, Varun. So all the best for that, and we'll certainly look forward to see that growing. So we now go to, Akshay. We understand, all of us understand about EVs, but what is it? Is it? I'm going to ask you a very complicated question right now. Is it comfortable, for an investor, or is it good for an investor to invest into EV right now, understanding that it's going to be a long-term investment? So how do you kind of look at it? And I'm sure because you've started this, so you have plans as to how it would help them. So if you can give one clarity onto that, because whenever I talk to somebody, the first question that an investor asks is this, that in my community, it has started, but I really don't know because, the cars are very less. In next 10 years, it would be huge. I know it would be huge, but can I really address it right now? So how do you take that and answer it?
Correct. So basically, first of all, thank you, Ashada, for that question, which is very important to address. I just want to understand one more thing. Like, is it like you said, investing in EVs? Are you talking about the EV, the vehicle, or the charging station?
Charging stations.
Okay, got it.
For you, I mean, that's particularly for you.
Yeah. Okay. So basically, the question is of utilization. If an investor comes and invests in a charger, would he get the utilization, right? So what I say, what we understand from data is that there are a lot less charging stations than there are cars or there are vehicles in India. I'll give you an example. Every month, in August, Tata Nexon was sold Tata Nexon sold more than 1,000 units, right? But there were 1,000 charging stations were not installed, or not 100 charging stations were not installed. And what we have been seeing with data is that wherever we install a charger, we get minimum 6 hours of utilization, which is huge, right? So the break even on the investment is like 1.5 years. Right now, which is huge because a lot of people have this myth, and going forward, it'll keep on decreasing. And the faster you invest on this, the better your chances for return, because what happens is you are capturing that area, right? What we've also seen is the user behavior. So, for example, we have installed chargers on various highways, right? So we have installed chargers on various dhabas, and there are more chargers coming up in that area. Now, people, once they are habitual of going to that charger, they'll never shift. So we have installed two. For example, we have installed two chargers next to each other in two parallel dhabas, but people just go to the charger where they are used to it, right? So it is very important for people, one, to come now and build this market, have that user behavior and user sentiment with them. And second thing is the break even is already good enough, right? So why not do it right now? So
In Delhi, I was talking about this in the morning also, that diesel cars will be scrapped after 10 years and petrol cars will be scrapped after 15 years. And automobile prices have increased. If you see the index, it's growing. And it has really grown in past 2 years during the COVID time as well. The sales have started declining. The second-hand cars sales have started increasing because of the cost. So considering this, the EV sales, whether it's for a four-wheeler or a two-wheeler, has also started increasing. But when you say that you need charging stations, what I understand is that every socket for a charge is different. So how do we address that? Is there something which is universal in nature, like we have those adapters when we travel out? Is something like that, or we have to be very specific onto what we buy and where is that particular charging station?
okay, got it. So what I understand from the question is there are different connectors for different cars, right?
Yes.
Okay. For cars it is different. For two-wheelers and three-wheelers it is different.
Yes.
But for all the cars, the industry has already have a different connector. So all of this is unregulated still, and the government is not playing a very crucial role in standardizing these connectors, which it should. But what we have done is we are building technology, right? So we build hardware which makes all the connectors universal, so you can just plug it and connect to your car. So that'll work.
So what is the network that you're looking at for investors, and where all? Because potential is existing all across India. So what is your plan to kind of capture that?
Okay, so we are building this network pan India, and we are looking for investors who can help us do it. So there are three things that our brand promises. One is accessibility. So we want accessibility of charging stations to everyone in India and at every place, wherever you are, just like your mobile network. You can find it anywhere, right? So that is what we promise. Second thing is reliability. So we are building a technology which makes it a reliable user experience. So even if you have a charger, you should be sure that it works and it works seamlessly. And third thing is affordability, because the tech we are building is built in India, and it is built in a way that it becomes affordable for the people to charge their vehicles. So when I talk about investors, I talk about the part where we make it accessible for everyone, and that is where investors come in. They help us grow this network pan India, right? And we are democratizing this. Anyone can set up any charging station with us pan India, and we help them with all the data because we are working with OEMs. We are working with fleet companies. We are working with like a lot of players in this industry, and we understand where you would get that sort of utilization, right? So based on the interest from investor, we help them guide what is the kind of investment they should make. And yeah, it's pan India basically.
Yeah. So we can see charging stations right from a garage, which is a unit garage or a personal garage, to a community garage, to a parking lot, to particularly, I'll come back to you as well on entertainment, but they say that, you park your car, charge it, watch a movie, go back. So that's something which is something which would happen, when EVs going to be there everywhere, because you need a charge. Every 300 kilometers, you got to do that. So I think, yeah, it's, the intensity of uniformity that we need to have across India is huge.
Correct.
So I think there is a huge potential, and of course, investors will get a first movers kind of an advantage that happened probably in preschools in 2000, in K-12s somewhere in 90s. So that is something which is, now that we see that's going, something like with the home care, it's going to be, really intensive.
Correct.
Yeah, so great, thank you. And we would be looking forward to see that growing forth.
Yeah, thank you very much.
So we'll come back to you now, Rahul and Anish. They both, something that we really miss. From past almost 18 months, we've not gone out and watched a movie.
Our cinemas are open.
Yeah.
So, yeah, if you would like to visit.
Oh, yes, absolutely. We would love to. What, how do you see that growing, understanding that, governments are against, this is the last thing that they open, right?
Yeah, the first thing to be to close
To be
and the last,
closed
yeah.
and the last thing to open. That's what I was saying, that it's only us who do events and the entertainment, which is completely closed. We are the last ones,
Yeah,
who
that's right.
yeah, open the gate. So how do you see that, growing? Because now people would get conscious, right? Having said that, this can never go off. That is something which people would like. But from a business opportunity point of view, how do you see that growing across India, considering your competitions as well that are already existing?
We see a large market at this moment in India. I think it is audible to everyone.
Now you have to probably take it.
Okay.
Yeah.
So we see a very good potential in this smaller segment of the cinema, because we believe that the bigger size cinema will be having a viability issues in coming years, right? So the market seems good for cinemas like like who are changing in terms of their sitting, the like cinematic experiences and all these things.
So they're more plush. I see, in your theaters, that seating is little more
Yeah, we
plush
have
and
the
comfortable
like
and
the most comfortable seats in our cinemas. We have installed the lounges in a first row, so people like the generation which is like millennial who just don't want to come and like lay down in the cinema. So we have installed the first row with the lounges, so they can come and they can sleep, they can watch the movie, just like that.
oh yes, I have two girls at home, 10, 12. I took them to a theater when they were like 8 and 10 for the first time.
Right.
And now they don't sit on any other seats other than the last ones, because in PVR
That's
it's
the recliner ones.
reclinables.
Yeah.
So they don't sit on any other thing. So I was, curious when I came to know about it, that I would be sitting with you day before yesterday. And I asked them, I said, why would you only choose a recliner? They said, Mom, it's a movie. I need to laze around while watching a movie. So it's not just entertainment, it's comfort, that they look for. So you're absolutely right. The younger generation, unlike, our generation, we're more
Yeah.
comfortable sitting straight and watching a movie because we want to watch a movie. For them, it's
They just want a free
entertainment,
popcorn and
comfort,
yeah, the
food.
comfort.
Yeah. So do you have concession areas as well, or you create it, or how do you serve food to people?
So for that, like we have a concessionary area, and we have all smart system. Like like you can sit in your seat, and you can like just scan the QR code showing on the screen, and the food will be delivered to your place.
So a franchisee would be independent as a unit when he runs that.
Right.
So how does he get
Would
the?
you like to answer this?
So what business sense does it make for him? So how does the movie run? Is it a private show that he does, or how does it really happen? If you could make us understand that.
See, first of all, let me tell you, this is like, okay, tell me, how many of you have been watching movies in theater?
Everybody,
Sir, very
we
nice.
love it. Yeah,
We all love
we
it,
are
right?
box office people.
Sir, which was the last movie you saw with your wife?
Yeah, somewhere in February.
Ruhi. Ruhi, it got released in between first and second,
Second
first
lockdown.
and second wave, right?
Yes.
But the last, yes, yes, and that's why we have 100% recliners only. नॉर्मली थिएटर में लास्ट सीट महंगा होता है, हमारे यहाँ पे फर्स्ट सीट सबसे महंगा है, क्योंकि वो एकदम 100% 6 फीट का इट्स वो स्विमिंग पूल में, जैसे आप नहीं स्विमिंग पूल पे के बाहर एक लेजिंग अराउंड के लिए एक चेयर होता है, वी हैव दैट काइंड ऑफ चेयर, इट वी कॉल इट लाउंजर्स. सो कितना भी आप घर पे नेटफ्लिक्स देख लो, देन एक तो कंटेंट का इशू है, यू कैन वॉच दिस थिंग्स ऑल टुगेदर, ऑल द कंटेंट, बट देन सिनेमा is a different experience.
Absolutely. So how does the business side of it happens? I mean,
And
say if a franchisee opens it, how and where he see profits coming in, or some kind of a positioning. Because you see, everybody does business for two things. One, a decorum, that
Right.
I am doing this. It's a prestige point for a family or for an
True.
individual. And second, of course, he wants to earn money
Very true.
out of the investment that he does. So how does that, strike up in Coniplex?
See, Complex, it's like a regular theater. What you have been going around here in PVR or some other theater, it's the same kind of theater, but a smaller version, you know. So we have that same thing, a very classy sound system, auditoriums, concierge, advertisement, F&B, very jazzy F&B, you know. So this is the demand of the coming time, and then ultimately, so the franchisee earns out of all these uh, pockets. They earn from the ticket sold. I mean, franchisee takes 80% of the share. We also invest 40% in the total investment, and we take 20% share. We are playing on numbers right now. We want to have first 200, 400 screens in India. We already have 76 screens. We have more than 200 screens signed up. South is a big market for us. वहाँ पे दो ही जगह पे जाते हैं लोग, या मंदिर जाते हैं या थिएटर जाते हैं. And I don't need to say this, but India is a land of entertainment. We are the largest content producer.
Yes,
We
not
all
just
live
in
a-
one language, in multi languages.
Yeah.
You're right. We produce a lot of content, and
languages.
yes, and we consume a lot of content. You know,
Yeah.
so Tamil or Malayalam, they're big film industries. They do bumper thing. I learned it when this one movie came up. Uh, the South movie that got
Vijay the Master. Recently.
Yes, that got recently. So these are the if you look at their numbers, they do huge business because everybody somehow watches those movies. Whether it's in a different language, you would dub it and get it released in any other city and it would work. So the content part is something that you take care of, and
Yes.
you so everything
We
at
take
the
care
back
of
end.
content part. We take care of movies. We take care of viewers, and we take care of on-screen advertising. Everything will be provided by the company. So even the viewers for like marketing or like the promotional activities, everything will be done by the company.
Sure. So it's like if I look at it right, the new generation people want to watch what they want to watch,
True.
and they want to do something which is private only for them. So I'm sure they would do a lot of private shows and private parties and
Yeah, because our like cinema size is small, like 60 seaters, 80 seaters, and 100 seaters auditoriums are there. So we get like like maximum group bookings or the corporate bookings or the training programs. Generally for the like during the first show, which is a matinee show, morning before the morning show, there is a matinee show, which is like there are no audience at in that particular show. So we have converted that particular show into the corporate show or the training shows, and we are also coming up with the educational programs for within the cinema.
okay, that makes sense because if
Yeah.
something is
Because
lying,
you have the
might as well value
you have
it.
the projector, you have the chairs, you have the AC, you have the sound, you have the stage, and everything is there.
Yes,
So
true. No, so Uber works on that.
yeah.
You have a car, use every minute of that car till the time
Exactly.
you scrap it up. True. So, quickly, if in case we have any questions, from the audience for them. So, I would ask, from you, anybody can answer that. In franchising, there are three things which are very important. One, an R&D that a franchisor does that you would do for your product or for your services. Second, you would look into the industry, how well can you penetrate. And third, you would look for partners who would put their, so-called their blood and flesh into the business and they would want to grow. These are the entrepreneurs, right? Somebody like you, but probably a smaller version in his own city, in his own area. So, what is it that comes to your mind when you think about your franchisee? What is it that you would want to do for him and at the same time expect from him?
See, let me give you a little bit answer on this. So I always look my franchisee as my kid. I'm a father figure to him. And the way I take care of my kids, I look into their each and everything about their education, about their health, about their food habits, to their likings, dislikings, taking them out on weekend vacations. Similarly, is a franchise. He is investing in you, and he is actually majorly see, when it comes to us, we don't want to sell a product. We concept. The thought process started with selling a solution to theater industry where the investment was very big. So you want to open up a theater, the investment was somewhere between 10 crore, 15 crore. You need 25, 40,000 square feet space. We came up with a solution. I need 5,000 square feet and an investment less than a crore. So, franchisee, the relationship between a franchisee and franchisor. So, the franchisor is a father figure to him, and the franchisor has the knowledge, proof of concept. They know the system, they know how to do it right, and
Supply chain and
so we always look them as a babies to us, that we have to grow them, we have to make them understand the
Mentor them
things,
and get them
make
to a
them
level wherein they start
learn, understand.
looking
Yes,
forward to stand up on their
because
own.
then franchising is a nice concept where you can penetrate in the market with a lot of numbers, with a lot of partners, and a lot of partners or kids, whatever, however you want to place it. But then it is the easiest way to uh, have a big number. So this is how the ecosystem has to be maintained between a franchisee and franchisor.
Sure. You have to say something on it, Akshay?
Yeah, no, I think what he said is right. It is slightly different for us because this is more also hospitality in some sort. Our franchisee, our service, it is unmanned, right? So the only relationship we have, it's more of a tech relationship because we have given all the resources to people and they can see, monitor. They do not have to man the franchisee. So what we do look for people, and we want to build that relationship with our people who invest with us. And as he said, we have the knowledge, we have built the product which we keep on evolving, and we want people who grow with us, and that is our motive. And we are looking for people with intent, not just money, right? So that is very important.
Sure, absolutely. That matters a lot. Just with money, you cannot just grow everything. You need to put in a lot of mind and resource and intent. That's a very good word to say. Yes. So you largely technology-driven company who works on quality and want service to be done by the franchisees.
Okay.
Absolutely, very cutthroat and clear expectations from them. So what do you have to say, Varun?
I think
You have a challenge there in the sense that your franchisees the quality is a bigger aspect in your case.
yeah, I think a pilferage is also equally important. I think you train them and finally they want to do their own. So
Absolutely.
that's also a
That's a
point. But
challenge.
I think for me it is as good as you when you create a startup and you say something to be called as a core team, right? And you say that the people who are your the stock based ESOP employees. So I think for the franchisees are similar to us, like in that way, because it is finally somebody who is the owner of the city, somebody who understands this territory. I think our relationship so far has been with the franchises are on similar nature. We totally take them as somebody who's a core part of the team. It is in fact more than that, right? So to an extent that they've invested in your business idea also, so they have shown all that commitment. So जैसे होता है ना कि we say that if somebody leaves their corporate big job to join a startup. So similarly in our case, if somebody wants to become a franchisee with us, we're treating them as good as the core team, right? So with
Sure.
all that things, it is possible.
In your case, I love a company called as Neighborly. There's a huge company into this particular caring thing. So, they also have the same thing to say. The only thing we care about is care of our patients.
Absolutely.
Nothing is more important. Yeah,
Absolutely.
true. Clear-cut expectations. So that's interesting. So what do you have to say about that? What do you want them to do? How do you? I always wanted to ask that. What if robot malfunctions? I mean, how does a franchisee fixes it? How does that happen?
So what we are doing actually, along with the franchisee, we are also providing the base of the main circuit box. Just unplug it, plug it. That's the simplest thing actually what we are doing it.
Okay.
So that way actually, from the customer point of view and franchisee point of view, they will not, they don't need to do nothing actually. Just unscrew, just change the box. That's what we are doing.
Okay.
And you have asked me one more good question actually earlier. Workforce. You want me to answer that question?
Absolutely.
Yeah. Okay. So who is the China is the largest population. Am I right? In the world. Yeah. As you know. Yeah. They are. They are. So if you see in the China, how they became actually the largest exporter because of the automation.
Yes.
How the automation is going to happen?
With
Because
skilled people?
with the people, no, with the mechanism automation, robotics, they have used it. So India is definitely want to be in the next place.
True.
So obviously we need to have, we are not replacing the workforce. We are only taking wherever the repetitive tasks need to be done. Why can't the robots to take place of it? So we human like brain is, they can able to think in innovative way, and they can able to make the things to work. So that way we are complementing rather than taking out the resources. So automation is needed any country who wants to be the next level. So that's where we are supporting India to become as in the next, right?
True. Absolutely. Absolutely. Because if you want to do multiple tasks, so India is facing a huge problem in terms of, getting self-sufficient in terms of manufacturing everything inside, which is not being possible because of this.
Absolutely.
Automation is a big gap.
Absolutely.
Wherein how we think we should be and how we are.
Absolutely.
currently.
And we are behind 20 years now.
Yes.
And also actually hazardous tasks. Okay. Recently we have tied up with one of the sustainable energy company. They pick up all the hospital waste, toxin waste, and that was managed by the humans. And they were thinking like due to all this pandemic thing, no workforce is coming for helping them. So we have provided them a technology where the robotic arm is picking up from the floor all the hazardous waste and dropping onto the conveyor belt. So where we have reduced the human intervention, such kind of areas is very, very important. At the same time, in a pharmaceutical one company, they do the lot of tests actually while making the drug, which is very dangerous to the human health. So there we have provided them a robotic arm where they are testing with the robotic arm is not at all hazardous because there is no human intervention. So such kind of areas, and not only in the restaurant, even if you take a restaurant, if it takes 4 to 8 hours, if one human you are asking him to go to from kitchen to the table continuously, how long he can able to work, right? So those kind of areas definitely we require automation. That is where we are providing a solution.
True.
Right.
No, absolutely. I'm with you, and personally, we work a lot on, companies who do a lot of, on the other side of it, recycling. So we
Absolutely.
promote a lot of them, even if that doesn't make business sense today, but there are some things that you need
Environmental
to
friendly.
invest. Absolutely. We're going through a huge climate change. We've never seen Delhi, what we saw day before yesterday. I'm not too sure if you've experienced that. It was bad. Water flooded everywhere, and kids thinking that Delhi mein to flood aa gaya.
True.
But water was logged badly out.
Yeah.
So we support a lot of companies like that also in our own way. That even if it doesn't make a business sense today, I'm sure 2 years down the line or 3 years down the line, it would make a sense because these pieces are required.
Steel industry recently we have arms actually, robotic arms. The foreign heat of that industry workers, it's very dangerous, and they get a skin cancer, and because of that kind of heat they work. So we have provided robotic arms to pull out all those iron kind of things.
So do you involve franchisees as well into it? So if they talk to somebody, do you kind of take their opinions and work on it?
Yes.
Okay. That's interesting, so that they can help it out.
Thank you.
So what do you have to say about it, Nitin? Because you also you involve a lot of workforce with a skill to clean up, and he has to take care of hygiene as well.
Yes.
Because everybody uses a card, and they would be now onwards little more conscious about getting that done. So how are you answering that? Because there is a requirement.
Yes, definitely workforce requirement. No?
Yeah.
Yes, actually, we are facing issues with the manpower. We are requiring huge number of manpower, but we are not able to source them. As we say that there are a lot of employment in India, but I feel that there is the people who are unemployed, no, actually they don't want to work. The people who don't want to work are unemployed, and I'm seriously facing issues with the manpower. I'm trying to get manpower for my franchisees, and that is the biggest challenge. Now getting customers is not an issue for us. Initially when we started, we were thinking that this concept would take time. It would take some couple of years for this to become successful, but from the first month, from our first franchisee, we were very successful in getting the customers, in convincing the customers, and the product is fabulous. And the customer who is using this product, no, they will never go for a water wash. So that is the response that we get from the customers. And because of that, now we are facing manpower issue, because we are getting thousands of customers, but we are not getting hundreds of manpower. So that is the biggest challenge that we are facing. And as we can have a discussion that if we can deploy some robots in our in car washing also, so we will look for that future also.
Absolutely, absolutely. Skill is something which is required in India, and I think Education Board has just taken a decision of changing our education system, and it needs to be implemented in next 10 years. But let's see how well they can do it. But skill is something that is a problem. But NSIDC is working a lot in that area. So I think there you can do that. But I think you have a very good connections here to involve the waterless services.
Yes,
as we
sure,
require
sure,
them.
definitely. Yes.
And thank you so much. It was a lovely panel, a lovely franchise opportunities that we can see coming in. So thank you to be a part of that and having a discussion with me on it. Thank you.
Wonderful talking to you, ma'am. Thank you.
Thank you, Ms. Marya. I request all our panelists to please stay. Can you please get the mementos on the stage? Ladies and gentlemen, I must say it was quite a lively session. We got to learn so much new things. I'm telling you, with every session, there is something new to know about. Thank you. Thank you to all the panelists. And I request Ms. Marya to please present mementos as a token of love and gratitude to each one of us. Right. So first one is for Mr. Rahul Patel, Mr. Rahul Pyari, and Mr. Anish Patel. So I just thank you so very much for joining us. Thank you, Mr. Bansal. Thank you, Mr. Gupta. Thank you, Mr. Singh. And Mr. Sharma. Thank you so much, everyone, for joining us, for taking your precious time out. We're so glad that you could make it. Thank you, Ashita. It was a wonderful panel discussion that we had. Thank you so very much. So this, ladies and gentlemen, this was our last session for the day. We can certainly go upstairs and look at all the outlets that we have there. You can get to know about a lot of franchisees up. And of course, I'm sure I'm going to see a lot of you tomorrow as well. So thank you so very much. I'll sign off for the day. Enjoy your day.